It's Wednesday morning in 2034. You open your banking app, but it does not only show your balance, it shows your financial future. Your AI has already analyzed your salary, bills, rent, groceries, subscriptions, taxes, savings, and spending habits. It says, if you keep this pattern, you will be short by the end of next month. Then it gives you three options: reduce spending, delay one purchase, or move money automatically into a safer plan. You do not call a financial advisor. You do not open a spreadsheet. You simply ask, what is the smartest option? And the AI explains it in plain language. You see, because in 2034, financial advice does not begin when people are rich. It begins every day inside ordinary financial decisions. And this is where the economy starts to change. Because this story is not just about banking. It's about what happens when AI makes financial intelligence cheap. So the first question is this: what changes when financial intelligence becomes cheap? Today, good financial advice is still expensive. If you are wealthy, you can have advisors, right? You can have tax planners, you can have investment managers, you can have people watching your money. But for ordinary people, finance is often confusion. You have bills, debt, savings, credit cards, mortgages, taxes, retirement plans, insurance, investments, and most people are expected to manage all of this with limited time, limited knowledge, and a lot of stress. So the old financial system is not only about money, it is also about complexity. People make financial decisions all the time, but many of those decisions are made with incomplete information. Should I save more? Should I pay, down debt? Can I afford this purchase? Am I paying too much in fees? Should I change my insurance? Should I invest? Should I wait? Today, answering those questions well takes knowledge, and that knowledge is not equally available to everyone. But if AI can analyze your financial situation continuously, not one time, not two times, but continuously, then financial intelligence becomes much cheaper. The AI can look at your income, your expenses, your debt, your goals, your risks, your habits, your taxes, your future plans, and it can explain what is happening in simple language. So finance starts to move from occasional advice to continuous guidance. Instead of asking for help only when there's a big decision to make, you may get support every day before you overspend, before you miss a payment, before you take a bad loan, before you make a financial mistake. That is the first economic shift you see. Financial intelligence becomes cheap, advice becomes more continuous, and finance becomes more personalized. Now, the second question is this: what new opportunities appear? If AI makes financial intelligence cheaper, then the work does not necessarily disappear. It simply moves. Before, a lot of financial value came from access to information. Who understands the market? Who understands taxes? Who understands investment products? Who understands risks? Who understands the fine print of every damn contract? Sorry for my language. But when AI can explain more of this to ordinary people, the bottleneck moves somewhere else. The new question becomes, can people trust the advice? Is the AI acting in their interest? Who is responsible if something goes wrong? How do we protect people from manipulation? How do we make finance understandable without making it dangerous? That is where new opportunities appear. We may see AI financial coaches, people who can help individuals use AI tools responsibly. We may see personal finance platforms that act like everyday financial pilots, basically. We may see new services for debt reduction, budgeting, retirement planning, insurance planning, and tax optimization. But you see, but designing for only ordinary people, not only for the wealthy or the rich. We may also see new businesses for small companies. A small business owner may have an AI that watches cash flow, warns about risks, helps plan or payrolls, basically, finds uncertain unnecessary expenses, prepares financial scenarios, and explains what the numbers mean. That used to require accountants, analysts, or consultants, or just business owners who are really, really curious and do a lot of things at the same time, but it's just not the case for everyone, right? So in the future, part of that becomes automated. But again, the human role does not disappear necessarily. It moves toward judgment, trust, compliance, planning, human support. Because finance is, well, let's put it this way, finance is emotional. People do not only need numbers, they need confidence, they need explanation, they need protection, they need someone to help them make decisions they can live with. So the new value is not only in calculating. I mean, that's AI could do in a much more powerful way than any one of us. The new value is in guiding, helping people understand trade-offs, helping people avoid bad decisions, helping people plan for real life, and helping organizations build financial systems people can trust. Now, the third question is this: what does this mean for you and me? Well, it means finance may become less intimidating, so to speak. Instead of opening your banking app and seeing only numbers, you may see explanations, warning options, scenarios. You may ask, can I afford this? What happens if I lose income for 2 months? Should I pay this debt first? How much should I save? What is the risk? And the AI may explain it clearly, not like a financial textbook, but like a personal guide in simple, real terms that any one of us could understand. This could make ordinary people more financially aware, more proactive, and less dependent on confusing systems. But there's also a risk. If AI guides financial decisions, then whatever controls the AI has influence. You see, a bank could guide you toward its own products. A platform could recommend what benefits the platform. A company could use your data in ways you do not fully understand. So trust becomes extremely important. Transparency becomes important. Regulations becomes important. Human oversight becomes important. Because cheap financial intelligence can help people, that's for sure, but it can also be used to manipulate them. So the future of finance is not only about automation; it is about alignment. It's a, is and you ask yourself the question: is the AI helping you, or is it selling something to you? Is it protecting your future or optimizing someone else's profit? That question becomes central. So the conclusion is this: every general purpose technology changes the economy in a similar way. It makes certain capabilities cheaper. When those capabilities become cheaper, they become more abundant. When they become more abundant, people start using them in new ways. That creates new demand. New demand creates new markets, and new markets create new services, new products, new businesses, new jobs, and eventually, it benefits everyone. And you see, in finance, AI makes financial intelligence cheaper. So advice becomes more abundant, planning becomes more continuous, and financial tools become more personal. But the new bottleneck is not only calculation. The new bottleneck is trust, responsibility, regulation, human judgment, data protection, and real world behavior. So you see, so AI will not simply shrink finance, as so to speak. It may expand it in ways we barely understand at this point. Because once financial guidance becomes cheap enough, more people will use it more often for smaller decisions in everyday life. So the real question is not only will AI replace financial advisors, the real question is what happens when everyone has access to financial intelligence? Because that is how we understand the AI economy, not by asking only which jobs disappear, but by asking what new systems appear when intelligence becomes abundant. And if this got you thinking, please leave a comment. I read everything. I would love to know whether you will trust an AI to help you guide your financial decisions. Thanks for watching, and I'll see you in the next one.